I want to start with a number that still makes me sick to say out loud. Auto-renewing my mortgage cost me over $12,000. And I didn't think I was making a bad or a reckless decision. I just did what I thought I had to do. I trusted my renewal offer and then I signed it. Thing is, over the next couple of years, that same mistake is going to cost people tens of thousands of dollars. Most people think renewing their mortgage is just standard paperwork. They've got the same house, they stay with the same bank, they sign a few documents, and then they're done with it. But over the next couple of years, that assumption is going to hurt people and cost people thousands, sometimes tens of thousands of dollars. And most won't realize it until they've already renewed. So today, I'm going to show you why renewal regret is about to spike and what mistakes people are going to make and how you can avoid being one of them. Picture this. In 2026, over 1 million Canadians are set to renew their mortgage. And most of those people are coming off rates that are under 2%. So payments for those people are approximately going to be jumping by over 20% on average. And the dangerous part for them about all of this is most people will simply just auto-renew with the first offer from their bank, thinking that they're doing the right thing. Making that safe choice is going to cost them sometimes upwards of $500 per month. And the worst part of this isn't just higher rates that they're getting. It's not realizing that they have options, but they didn't even look. And this is what keeps happening. People feel safe with their renewal because nothing changes. They're in the same home. They stay with the same lender, which their parents would have done. And they set the same payment frequency that they're already used to. And so what our brains do is tell us, why, Ben, should I mess with something if it is already working? But I would argue that that isn't the right logic you want to use with this. That is more so comfort, staying with what is familiar. It's really the same reason people stick with subscriptions, services that they never use, they never watch, or gym memberships they just don't use. Except the difference is with your mortgage, the cost isn't $10, $15, $20 a month. It's probably thousands of dollars per year, but also not to mention the feature and the terms that come, or the penalties that come with your mortgage. And in places like Kelowna across BC, this feels even more convincing right now because the market, it feels softer, prices aren't exploding, the job market is weak, and uncertainty makes people cling to what is familiar. But that safe, nice, warm feeling is going to hide opportunity for you. I've seen homeowners miss chances to improve their monthly cash flow when they need to, access equity, or restructure their mortgage that actually works for the way they are living today. A mortgage renewal should be treated like when you first signed your mortgage rather than renewing an insurance policy. You don't just take the first offer because it's easy, it's straightforward, and it feels formal. You want to compare it against available options. Now, let's talk about what's actually changed since the last cycle. Rates are definitely not going to go back to 1.5%, 2%. That era was exceptionally rare and it is most definitely over. But today's rates are very different from even a year ago. Rates right now with fixed, they're hovering right around the low 4%. Variable, you can often beat that, maybe 3.6, 3.7 in many cases. But here is the part that you're gonna miss if you just focus on the rate. Banks are gonna negotiate with you, but only if you push them, right? You may be a AAA client to them, so why not? If you just auto-renew, you'll never see their best offer or their best rate or the best terms for yourself. But this isn't just focusing about rate. Rate is absolutely the biggest piece, but penalty structures are different now. Hybrid options exist, right? Breaking or adjusting later may cost less than people actually assume, which brings us to the mistakes that people are making. Mistake number one is obvious, but it is going with the auto renewal. Banks will send your renewal offer about 3 to 4 months out from when your term ends or the maturity date. And what I've seen right now, they're often 0.5% above what market rates are. So you may ask, well, why is that? Because most people will just sign it. Mistake number two is locking into a 5-year fix simply for your peace of mind without considering changes or flexibility in your mortgage. A shorter term can sometimes be the better option, especially if we might see rate shifts again. And don't forget, you can always lock in with a variable. Mistake number 3 is thinking that loyalty is saving you money. Big banks, yes, they feel safe, they have great products, but monoline lenders, credit unions often offer better pricing, better penalty structures for their borrower. It isn't uncommon for a homeowner to switch right now, save 0.25% just by switching or by renewing. And here's the thing most people don't talk about. People are going with what feels safe right now. The recession word, job market, political environment, things seem unsteady. So you make a decision based off that, but then you feel regret, not now, but when your condition and the overall macro conditions change. And that's where renewal regret is going to creep in for some of you. Let me give you a few real case scenarios. A BC family renews into a 5-year fixed at say 4.5%, but 2 years later, comparable rates are now at 3.5%, but they're stuck paying about $300 more per month. Over the next 5 years, that's $18,000 gone, simply because they made a simple decision that felt safe. Here's another scenario. A couple will auto-renew into a fixed rate simply because a variable feels risky. And then what we see is rates drop potentially. Their payment could have gone down, but instead they're locked into watching everyone else benefit when they could have rode the wave down and then locked into a fixed. And the toughest one I see here locally is a 26% payment increase, $600 more per month. So what does that look like? That means less vacation spend, maybe your personal activities or kids' activities, and worst of all, in my opinion, investing stops or saving. In a softer market, some people even start thinking about selling because they can't handle the higher costs. Not because they want to, simply because they feel trapped by their mortgage payment. But here's the difference that you need to notice. The people who regret their renewal are the ones who treat it simply like standard bank paperwork. They will write it in a way that softly communicates that you don't have options. The people who don't treat it like that, they treat it like a planning session or a strategy session. Those are the ones that can avoid it and look at their options on paper. So the shift is you need to think about your renewal as a reset opportunity for your entire mortgage, because that's what it is. Ideally, you want to start thinking about your renewal a year ahead, 9 months ahead, 6 months ahead. You want to review your credit, take a look at your monthly household cash flow, take a look at how your life has changed from when you first signed up for that mortgage, and talk openly with your broker about your risk tolerance. What you want to do is you want to know that you have options so you can shop around, you can compare, and with that information, you can negotiate. Sometimes that might mean a variable rate, maybe it means a shorter fixed rate. Sometimes maybe restructuring to improve flexibility and consolidate some debt, or you access some equity. So there's no one single correct answer, but there absolutely is a wrong one, which would be doing nothing, hoping for the best, and telling yourself that just because I've been with this bank, they're gonna give me the best rate. So if your mortgage is renewing over the next 12 to 24 months, this video is for you, but this channel also is for you. So go ahead and subscribe. I focus on helping Canadians make better money decisions with their mortgage, focusing on long-term strategies that net them the best case scenario. So if this video helped, go ahead and subscribe, like this video, you'd be doing me a favor. Make your mortgage decisions based off clarity rather than regret. Thanks so much, and I'll see you guys in the next video.